Friday, December 2nd, Standard market analysis, and I'm starting out where I usually do with the S&P 500, which represents, in my opinion, the overall market direction with individual nuances in the QQQs and the DIA or the NASDAQ and the Dow Jones. But basically, they're very similar on the average, long term. Yesterday, went into detail as to why I thought it could be a high of very significant proportion up against major bear trend lines in a resistance area, finished closing some old gaps, a variety of other things, close to being overbought, not quite, unfortunately. So far, so good. We opened well below yesterday's low and have come back into yesterday's range and have started to go back down somewhat since the rally high. I'd like it to close below yesterday's lows, and the area it is now is okay. The lower the better, of course. The opening gap was closed already. At first, pretty accurately. Let's take a look at that on the 1 minute spider chart. Here we go. Well, how about that? Okay, so the opening gap started to climb, got back to this level right here, right at that point, and that's where it closed the gap, fiddled around, and finally went through it a little bit. We had a trend line develop, pretty interesting, worked fairly well most of the morning. It's broken. We started to dip into some support. The last couple of hours or so, double top and a minor dip so far. If it keeps coming down, then my Friday statement about yesterday's price action, Thursday, December 1st, would be looking better. On the other hand, what I don't want to see is a move that is closing above yesterday's close, let alone a move that would close above yesterday's high. That breaks the trend line, starts to eat into overhead resistance, perpetuates the uptrend, which is not broken. There is a bull trend line underneath these lows I just highlighted, which starts at the low on October 13th. Again, October 13th is a profound turning day, maybe more so than I thought at the moment. When I think of the moment, I think it's spent its gas, frankly, and we're going to start coming down into December. Today's December 2nd, into the Santa Claus rally beginning, which is just before Christmas. And the Santa Claus rally tells you to buy in general just before Christmas and get out the first few days, or the first day of business day of January. We have a very accurate and historical record that shows that this is in the ballpark. I'm thinking of 85%. I don't remember. I got to look at my numbers from last year. And it's very reliable. It's in the same ballpark as the October lows, which, of course, past performance is not indicative of, et cetera, et cetera. Anyway, so far, so good. I'd like some more weakness. Closing below today's low, which is the opening, would be very nice. Here's okay. Anything stronger is making me more nervous. Let's take a look at the DIA for a moment. The DIA, the Dow Jones ETF, has done a darn good job and did make new highs for a significant amount of time since April. So far, there's no upside follow through. That was a half of one day and half of the next, so to speak. We're certainly not dropping like a rock. I still have to say the same thing I said about the S&P. I'd like to see it start to roll over down again and start to get below and close below the opening, which was the low of the day. Again, this is about 10:30 California time at the moment. Maybe you can see the clock on the bottom right. The DIA doesn't have any significant differences on a short-term basis, except that there was no initial gap on the opening. That I think was not below. That's right. It wasn't below the previous day's low, which is right there. So there was no real opening gap. They were almost equal for 2 or 3 minutes. Nevertheless, rally, nothing particularly super profound, and starting to move its way back down again. Lastly, for the indexes, Qs. Whoa, what am I doing here? There we go. Have made new highs since middle of September, a couple of months and a half, but it hasn't really even gotten close to its major bear trend line, which is where the S&P is yesterday. So even yesterday's high wasn't super close. Now, current quotes, very similar to the spider, open on slow, came up, closed an opening gap, and is still sitting around yesterday's lows, which is neither here nor there for me at the moment. Lower the better, higher I get a little more worried, but I'm not changing my mind. At the moment, fail-safe buy stop would theoretically be a tick above yesterday's high, period. That's it. I'm going to make this short today. I'll be going into futures and sectors and forex and maybe more detail on the Santa Claus rally tomorrow. Thank you very much.